morning and welcome to our review of the data and events this week, starting the 17th of June. Hot topic this week, as indeed was last week, is the FOMC and taper on, taper off. Is it going to happen? Is it not going to happen? And with the Federal Reserve's rate setting committee, the FOMC meeting this week, it is a very important week in those deliberations. Let's just have a quick review of last week's markets. The FTSE was down about 1%, the S&P also down 1%, in fact the FTSE was down more than 1%, about 1.5%. The euro, that gained further ground against the dollar. Read these discussions on tapering, another 1 1/3 cents higher, that's over 1%. Cable, that British pound against the dollar, that rallied over a cent as well, what's that, 0.7%. But the big move last week was, and similar to the previous week, was the Japanese yen. Further profit taking there in the big short. The yen rallied over 3.4 yen against the dollar, which is obviously about 3.4%. Really, mostly on the back of profit taking, although there were concerns about the lack of detail from Shinzo Abe's third arrow, as it's called, in terms of the next policy announcement to do with monetary easing. But no, it's all to do with quantitative easing in the US and the 85 billion a month program that the Fed is currently engaged in, and what effect this may or may not have on the economy. There are a lot of unintended consequences on this. We discussed this last Thursday. There's an interesting table from the Financial Times. These are the changes in some of the emerging markets since the 1st of May. Quite astonishing. Not just the currencies, as we can see, the rand, rupee, real and peso and the baht have all fallen quite sharply, but stock markets as well, as we can see, some of them falling 16-17%, certainly in Brazil, Thailand. Turkey has taken another significant fall since these figures were produced, due to sort of political unrest there. But this is the unintended consequence of the quantitative easing discussion and the tapering of that quantitative easing. The US has the world's reserve currency. A lot of those dollars are used to fund emerging market investments, and we're seeing that bubble burst. Is it because of the QE? I think it was probably a little bit overdue, but that's certainly causing some sharp profit taking and falls in those markets. In terms of where they've come from, it's not that significant yet, but it's interesting that we're seeing, the Chinese economy slow further, the emerging markets struggle, the Eurozone struggling. So there's a lot of sort of, unknowns at the moment, and the economies, finding their feet. The reason why the QE is looking to be reversed in the US, it's basically as interest rates start to normalize, as the economy picks up. This is a massive experiment that the Fed's engaged in. The question is, how do they reverse it? And I think so far the discussions that the Fed is having with the markets suggest that the markets and the economies are not ready yet for this. And the Federal Reserve said in its last meeting that a number of participants expressed willingness to adjust the flow of purchases downward as early as the June meeting. And that's been repeated so many times, but in fact the Fed did go on to say that if the economic information received by that time showed evidence of sufficiently strong and sustained growth. I'm not sure that it has done. We had a fairly decent non-farm payroll at the beginning of the month, but the data's sort of been mixed since then, so I think the jury is out, really. Okay, let's have a quick look at the data that we're seeing this week. We've got the G8 meeting today and tomorrow. Shouldn't really be market moving at all, really. Seems it's the G7+1. It's all to do with Syria, which is a bit of a shame, but a lot of work's done behind the scenes on these meetings, so I'm sure they're going to make some sort of inroads into the topics that they're discussing, but not market moving really as far as we're concerned, unless something out of the ordinary hits us. No, the first sort of important bit of data next is tomorrow, starting off with our inflation data. Slight uptick from the 2.4% we had in the previous month, which is a very good bit of data, 2.8 down to 2.4, but there's been an uptick in some components of the index. This is, has the ability to move any sterling crosses, obviously, and the FTSE, so it should be watched quite closely. We then have the ZEW Economic Sentiment Indicator coming out at 10 o'clock. A pickup from the previous month, still recovering a little bit. This is the sort of narrower index, unlike the EFO index that that we get on other weeks. But this indicator is quite closely followed, so that will have an effect on the Eurozone markets, etc. Following that, really, Wednesday, we have our minutes from our own rate setting committee, the MPC, here in the UK. It's going to be interesting because we've had an improvement in UK data, so it's possible that the three members who have been voting for further quantitative easing may change their stance, but we're not expecting anything else in terms of any changes ahead of Mark Carney taking over as the Governor of the Bank of England next month. But that could pose some interesting questions for the markets if those three participants no longer want quantitative easing. And then the big event of the week is the culmination of the two-day meeting of the Federal Reserve, the FOMC's, the rate setting committee there. We think it's unlikely that they're going to do too much. The unemployment, or the employment report for May back the first week of June, I should say, reasonably positive, but I don't think there's been any sort of strong evidence that suggests that the Fed should be taking action, and I think it's likely now that this tapering may not happen, A, due to market reactions, and B, because the data is not strong enough. I think it's probably going to be September before this starts. That's the main event. We then have various announcements on Thursday, flash manufacturing, both in the Eurozone and in the US. The most important bit of data really actually is the news from the Federal District of Philadelphia, so the Philly Fed Manufacturing Index there, an improvement from the poor figure from the previous month. And then on Friday, nothing much really actually. CAD data, Canadian CPI news, but apart from that, that's really it. So the big focus really is midweek, Wednesday at 7 o'clock in the evening. Good luck with it all. We'll reconvene on Thursday at 8 o'clock. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trendsignal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trendsignal website for the latest events and to book your free place.